Hey traders, welcome back to the weekly Forex Forecast. Last week we saw the dollar correcting and it is still in a consolidation. However, on Thursday and Friday we saw the dollar rallying sharply. Why? Because on Thursday we had hotter than expected inflation data out of the US, and on Friday we had hotter than expected inflation expectations out of the US. So going into this week, although the dollar is consolidating, I do still like dollar long plays to the upside, but it's the Swiss franc that's really standing out as the best market to be trading in Forex this week. So if you have a quick look at the scores for the coming week, you can see it's the Swiss franc which is sitting pretty at the top of the scorecards here. And not only is it the strongest in absolute terms, it's above the crucial 50% mark. This is where we really start to see outperformance in these currencies and in these markets. And it's also getting stronger. So Swiss franc long plays are absolutely my number one play heading into this week. And my number one Forex pair would be Aussie franc to the downside, because we have those same characteristics in the Aussie. It's below 50, which is the crucial pivot point at which we really start to see underperformance in these markets below 50, and it's getting weaker. Alongside that, I do also like New Zealand dollar versus the Swiss franc. And also we're going to be looking at both the euro and the pound, which are bearish to neutral and neutral versus the Swiss franc. I do think they are setting up quite nicely as well. Now, we're not going to be looking at the Japanese yen. Why? Because although the Japanese yen is one of the better shorts in the scorecards, the problem is the risks around volatility shock this month, as we've been discussing in previous videos. The VIX was up 20% at one point yesterday, and it does suggest there could be a risk of a volatility shock over the next 2 weeks, as I've been highlighting all the way back in September. Actually was the first time I highlighted this, saying to you guys, beware of a potential volatility shock. So because of that, I'm still just trading defensively, in the sense that I'm really just focusing on markets that are risk off. So in the event that something happens and we get a volatility shock, I will be on the right side of them and avoid being on the wrong side of something serious, which is a risk on trade basically going wrong. So because of that only reason, I am filtering out yen shorts once again this week. But I wouldn't want to buy the yen either, because if there is no volatility shock and no flight to safety, then the yen actually is not a very good buy. So the yen is off my list because of this. And alongside the Swiss franc, I'm once again going to be looking at the US dollar to the upside, even though you can see the score is actually getting weaker. And this is a sign that we're likely in a bigger consolidation or a bigger correction. So after the Swiss franc pairs, which are my favorite, I do like Aussie dollar to the downside this week, New Zealand dollar to the downside, plus we'll also be looking at euro dollar to the downside and pound dollar to the downside. Okay, so let's have a look at the markets this week, starting with crude oil. This was a market I highlighted to the downside, and you can see the gap up on the events taking place in the Middle East, right into the area where last week I was looking for potential short opportunities. And you can see that this did actually sell off nicely from here, came down and closed the gap. So it was a very good opportunity in here. This didn't translate over to oil stocks as well as the commodity itself, which you can see really nicely closed the gap before rallying. So going into this week, here's the dilemma with crude oil. It's the same dilemma really as the Japanese yen, is that we're stuck between a rock and a hard place, because I really only want to focus on risk off trades, which is crude oil to the downside. So any pullback in this market would be viewed as the opportunity to start to look for a sell-off into the 82 area or a pullback into the 93 area. However, here is the problem. We know what the problem is. The problem is on any escalation in the Middle East, we can see oil spiking like it did on Friday in anticipation of a land offensive into the Gaza Strip by Israel. This is why we saw oil rally on Friday, and it's why we saw gold rally, which we're going to look at later on in the video. So the dilemma here is that the risk off trade is to the short side, and crude oil is actually setting up as a good short. But if you get involved in a short and there's an escalation in the Middle East, this thing is going to spike higher potentially. So for that reason, I'm going to be sitting out crude oil. I just think there's too many risks around crude oil going into next week. We don't have to trade it. There are other markets to trade. Okay, so let's have a look at the Forex pairs, starting with Aussie franc. This is my favorite market going into next week. And you can see last week we actually gapped down, we consolidated, and this is where we're talking about pullback, and we broke straight through into the max profit taking zone and actually through it. And this is suggesting this week, actually, we should be looking for follow through, because this momentum to the downside, this is a market that really exceeded the probabilities priced into the downside last week. So I really like Aussie franc, and a previous low right over here sits right in the new max profit taking zone. So any pullback in this market is viewed as an opportunity to look for intra-week bearish reversals and breakouts down to the 0.56100. Or if we hold here and we bounce and we pull all the way back and maybe even test the underside over here, this would be the second place, the 0.5760, that I'd be looking for a near-term short in Aussie franc next week. The second Swiss franc pair I like is New Zealand franc, and all of these markets, but especially New Zealand and Aussie because they're commodity currencies, all of these markets will underperform or should underperform the Swiss franc in a risk-off event. So if we're looking at Aussie franc and New Zealand franc especially, these two should underperform the Swiss franc even without a risk-off event. But if there is one, if there's a volatility shock over the next week or 2 weeks, then Aussie and New Zealand should actually underperform to the downside, even over and above euro and the pound. And that's why these two are highlighted in gold as two of my favorite markets heading into next week. So any pullback in New Zealand franc, and you can see it's really, really steep, this sell-off. So I would like to see a correction consolidation to get a better price. Any pullback is viewed as the opportunity to look for bearish breakouts down to 0.5240. And if we hold and we bounce and we pull all the way back, 0.5380 is the second place I'd be looking for a short-term kind of sell the rip opportunity. So instead of on a breakout, on a kind of pullback, would be the 0.5380 for a near-term short opportunity in New Zealand franc next week. Next is Euro franc. Now Euro franc, like Aussie franc, was a market I highlighted in last week's video to the downside, and we did have a massive sell-off. And you can see in last week's video, we did kind of gap down, we had a very small pullback, and then we traded into the profit taking zone. We kind of held it, but at the end of the week, when we had that kind of flight safety in gold, when we saw crude oil spike in, we saw stocks selling off, we also saw that flight safety in the Swiss franc, Euro franc to the downside. You can see the momentum driving Swiss franc to the upside against Euro franc, in other words, Euro franc to the downside. And that is indicative again of momentum and further declines this week. So any pullback in this market is viewed as an opportunity to look for a breakout. So we're really looking for two things each week, either intra-week breakouts down into the 0.9420, or if it holds and there is no breakout and it trades all the way back, and maybe we test this low here, the 0.9560, that's the second place on the pullback. I'd be looking for a near-term short opportunity in Euro franc. And the final franc pair is pound franc, another market highlighted to the downside in last week's video as a good short. And we did gap down and we actually consolidated and then traded into the profit taking zone. And very similar to Euro franc, we held it until we got the flight to safety on Friday, gold up, Swiss franc down, stocks down, etc. And don't forget, Forex markets are used in top-down macro frameworks as leading indicators alongside commodities for equities. So when we look at the NASDAQ, potentially posting another lower high, and if it does break the previous low, this is when you can start to see real sell-offs and capitulations, when you get that kind of technical reversal. But is that going to happen, or is the NASDAQ going to bounce higher? Are we going to see stocks going higher? Well, this is the question everyone's asking, but the Forex markets here are telling you that this is risk off, and this is probably just the start of it, because that is the first piece of momentum we have to the downside. When you look at the flight safety in gold, it's telling you that stocks are very much at risk of breaking down. When you look at some of the leading benchmarks like the Russell, which is made up of small caps, so it's cyclical in the sense that it's more exposed to the business cycle, so it tends to lead other benchmarks. It's already broken down quite substantially more than the NASDAQ, which is currently right at that point where it could potentially go either way. And then you look at the Kospi, another leading benchmark, already breaking down as well. So there's real risk here over the next 2 weeks that we get this kind of volatility shock. So going into next week, any pullback once again in pound franc is setting up as a great opportunity to look for intra-week breakouts down to the 1.0840. And if we don't break out and we fail to break out and we pull back and we start to test lows over here, the 1.1050, we could say, that is the place I'd be interested in selling on a pullback, pound franc to the downside next week. Okay, so moving on to the dollar pairs, my two favorite Aussie dollar, New Zealand dollar, and the fact that the Australian dollar is at the bottom of the scorecards and the New Zealand dollar is not far behind is in and of itself, especially with the Swiss franc and the US dollar at the top, that is telling you there is a risk-off regime kicking into Forex. And this is going to play out in other markets as well. So going into next week, any pullback in Aussie dollar is viewed as an opportunity to look for bearish reversals and breakouts intra-week into the 0.6200. Or if we fail to break out and we pull back, and maybe we test these lows over here, you can see a very mini head and shoulders, this would be the area I'd be interested in selling Aussie dollar on a pullback heading into next week. Next is New Zealand dollar. Now, New Zealand dollar has had a really nice sell-off last week, and going into this week, this is one of my favorite markets to the downside. Any pullback or consolidation is viewed as the opportunity to look for intra-week breakouts to the downside into the 0.5800. Or if we hold this and we pull back and test the 0.5980, this is the area I'd be looking to sell this on a potential pullback next week. Next is euro dollar. We've already started to break out of this consolidation, of this correction. And so going into next week, any pullback is viewed as the opportunity to look for bearish breakouts intra-week down to the 1.0380. Or if we pull back and we retest the highs over here in the 1.0650 area, this is where I'd be interested in shorting euro dollar next week on a pullback. And the final dollar pair is pound dollar. Again, very similar to euro dollar, we've got the sell-off, so any pullback is simply viewed as an opportunity to drop down and look for bearish breakouts intra-week into the 1.200. And if we fail to break down intra-week and instead we just pull all the way back, especially if we retest the high, this would be the second place I'd be looking at potentially shorting pound dollar on a pullback, in this case, next week. Okay, so wrapping up the video with gold and silver, and gold is a market that I've been highlighting to the downside in previous videos, and it has actually performed very nicely to the downside. And again, last week, I was looking for shorts in gold. In fact, I took a short in gold and I got my fingers burnt on this because everything was looking pretty normal and there was nothing out of the ordinary in gold last week until Friday. On Friday, we had this monster move, which was priced on a daily basis as having a less than 1% chance. And the entire weekly move last week was priced as essentially there was a less than 5% chance of that happening. And yet it happened on Friday. So very often you don't tend to see this. You don't tend to see improbable things happening in markets unless there's a catalyst. Usually there has to be a catalyst. And what was the catalyst? It was the threat of a land invasion by Israel into Gaza this weekend, which other entities such as Hezbollah and Iran have said would or could incite an escalation in the conflict. And this is why we saw a flight to safety. And we've seen this even in the Swiss franc. We saw on Friday the Swiss franc rallying. We saw gold also rallying, oil spiking, etc. So coming into this week, there's two things here. One, the dollar is strong, and it is actually one of my favorite long plays. Therefore, that is actually a negative to gold and silver. But with gold, we are seeing safe haven qualities coming to the forefront. So I wouldn't want to short gold going into this week. So coming into this week, because the dollar has peaked in the scorecards and could be set for a bigger correction, potentially, I would consider, because of the safe haven qualities of gold, I would consider potential longs. So any pullback, I don't think it's the best market because there is an argument, for correction or downside. One, because we've had such a sharp move, this usually pauses or corrects. And also a stronger dollar also is a negative for gold. So it's not my favorite market, but on balance, out of these two, I would potentially look for gold to the upside next week. I wouldn't short it. So any pullback is viewed as the opportunity to look for potentially a bullish breakout, especially if we see the US dollar start to soften and continue to correct. And I would be looking up towards the 1980 in gold next week. If we hold this and we pull all the way back and retest the 1880 area, this is the second place I'd be looking to potentially buy gold on the dip heading into next week. And finally, we have silver. Now, silver did actually also see quite a strong move at the end of Friday yesterday. However, silver doesn't really have the outright safe haven qualities that gold does. So it didn't have anywhere near comparatively the rally. It is actually a more volatile asset, but it didn't have, the scope and size of the rally that took place on Friday like it did in gold. So going into this week, there's a couple of issues with silver. I don't really like it and I'm unlikely to trade it because the dollar is bullish. I do still like dollar longs. Again, if we get a deeper correction in the dollar, and we don't get a volatility shock over the next couple of weeks, in fact, the dollar just starts to soften, then, gold to the upside, yes, and silver to the upside perhaps, but I don't think this is a fantastic market. On balance, I would still prefer to short silver because it does not have, real outright safe haven asset status. So any continued pullback in this market, and I would be looking at this potentially, you can see this is essentially setting up as a big bear flag. I would be looking at this to break out, and I would be potentially looking at shorts down to the 2170. And if we pull all the way back and retest the high, the 2370 is where I'd potentially consider, although probably won't look at trading this at all, but I would consider potentially shorting this from the 23.60. So just to reiterate, there are problems around silver. We cover silver every week. I would prefer to leave silver out. And if you are going to get involved in, gold or silver, for me, that would be gold and potentially gold to the upside. But again, I still don't think these two are fantastic markets heading into this week because of the fact the dollar is strong. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities.